Hi everyone and welcome to the Budgeting webinar. As with the previous webinars we've done in last week, I'm really keen to make this as interactive as possible. So I think the key is if you put your hand up down the bottom of the screen, I'll see you want to talk and I'll turn on your microphone. Otherwise, if you've got some questions, if you put them in the Q&A section, I'll be able to answer them. If you put them in the chat section, everyone else will be able to see the comments. Once again, really keen to make this as interactive as possible. This webinar will be recorded, and I'll just go through some of the housekeeping rules. As I mentioned, it has been recorded. Really keen to make it as interactive as possible. Either raise your hand or say type your question in the Q&A area. We'll send through the link to the webinar probably in the next couple of days to all our clients. Bit of a full agenda today. I've said, I guess, quite a few times over the past couple of weeks to clients that now really is the time to prepare a budget. A lot of uncertainty in the market. We are, of course, going down to level 3 lockdown at the end of Monday. With that will come, I guess, some hope that things get back to normal as soon as possible, but still plenty of uncertainty. So the agenda today is I'll firstly go through the top reasons for not preparing a budget. I do get a lot of these reasons given to me. Just wanted to go through a couple of them and hopefully debunk some of them. Go through the benefits of preparing a budget, and then focus on the key aspects of a budget, going through how to budget revenue, how to budget for direct costs, how to budget for overheads. I'll then stop pretty much halfway through for an Ask Me Anything budget related normally, but otherwise anything you like, it's all good. I'll focus on some COVID-19 considerations, then look at how the bank can help. Often the bank kind of can be seen as a bit of a pain to have to deal with, but I'd suggest in a lot of cases it's going to be important to actually deal with this, the bank in this situation. The Business Finance Guarantee Scheme, there's been a lot of, I guess, news around how this works, and there's still quite a lot of uncertainty. The banks have now all released their specific terms for how it works, so I'll just go through those. I'll then focus on our budget offering. We've decided that we probably need to be quite proactive on this and have just come up with our own budget offering using Spotlight Forecasting, which I'll go into it in a minute, which is probably at the end of the seminar. And then I'm finally going to touch on some government funding. So in the announcements made last week, there was no immediate cash flow given to small business owners, but there is the ability to access funding for professional advice, of which preparing a budget is included. So we have been, Rival Accounting has been accepted as one of those providers. So essentially you can get your budget prepared for free as long as the work's done between 29th of April and 30th of June. So it gives us about a month window there. Oh, actually 2 months, sorry. And then finally wanted to touch base on what is working for you. It's all well for me to come in here and say that, you should do this and you should do that. I have got the experience, but I think it's really good if some of you could share just what's worked for you in terms of budgeting. Right, so just wanted to kick off then with the top reasons I hear not to prepare a budget. First one is it's hard to do. Yeah, I guess it is pretty hard to do if you haven't prepared a budget before. Often the hardest part is actually getting started. Once you've got started and once you've got a template in place, you'll often find that next year's budget is actually a lot easier to do. So yes, I think that is a good excuse, but I don't think it's actually a valid one because you can get around that. Next reason I hear is it's just guesswork. Well, by the very definition, unless you can actually see into the future, yes, it is guesswork. And FYI, if you can see into the future, I'd suggest picking a lot of numbers rather than worrying about a budget. But essentially, it's educated guesswork, I think, is probably what I'd like to say. It's actually about trying to look into the future and really basing the future numbers on some logical assumptions. It's amazing how often once you actually get kind of maybe through 2 or 3 iterations of a budget, so that's over 2 or 3 different years, just how accurate the budget can start getting. The key is you can also actually learn a lot about your business model. So yes, it is just guesswork, but I think it's still worth doing if it's educated guesswork. Next one I get is I don't know how to start. Yeah, I guess it's sort of linked to the first one. I think the best way to start is just to start, whether it's a case of bringing in your numbers from zero as a starting point from last year and having to go from there, or touch your base with us. The key is you have to start. And once you've started, you can't really use that excuse anymore. So it's another excuse debunked. Another one I get is something always comes up that makes the budget wrong. Yeah, well, that can quite often happen, whether there's, i.e. COVID-19, or whether maybe one of your competitors, a new competitor enters into the market, or your machinery sort of packs up and has to be replaced. There's a few things that can come up, and that's just, I guess, business and life. But the key is the budget is all about sort of dedicating resources and actually be able to plan for the future. If things come up, then in theory, if you've got a budget, you can actually just rejig it to make sure you can get through the year. So I don't really see that as an excuse. At the end of the day, if you're comparing actual to budget, you can always say, well, we didn't quite hit it because of that. That's not the end of the world, but still definitely worth doing the budget. Another one I get is I don't want to be constrained by a budget. It's an interesting one there. Essentially, what that's saying is if I've got, say, a spend of $10,000 on marketing, I don't want to be constrained to only spend $10,000. My answer there would be you can certainly go over spending on a budget as long as the revenue increases by more than the increase in spend. So I think a budget gives you good parameters to work within, but there's no understanding with a big stick if you actually go outside the parameters. All I would say, as I said before, is if you are going to increase the budget on expenditure, make sure your revenue is increasing by a higher figure. And then the last one is that it's boring. Well, yep, I guess that's probably the best excuse on there. I have to admit, a budget's not the most exciting thing to do, but I think it is really important. To prepare a budget, so you've actually got some targets to aim towards. So that probably, as I say, is the best excuse, but I don't think it's worth putting off. A lot of things in life are boring, but you've got to do them anyway. Okay, first poll of the day. You can see that's Bowden there. I'm just going to put on a poll and get you to comment as to what he is doing. Okay. Okay, so I've just put that poll on there now. If you could just click on the appropriate box. Just give about probably another maybe 10 seconds to get a few more answers in. Okay, I'll just share that poll. Well, I thought someone would actually go for Bowden who. Obviously, no Hurricanes fans here. That's a surprise. The correct answer, actually is a correct answer in this one, is I can't tell. So one of you has actually picked that as the correct answer. And the reason I always share this is I liken going into business without a budget a lot like Bowden just kicking the ball. You can't actually see the post that he's aiming at. He could be trying to kick that into the stands. You'd assume over the post, but you don't know. There's no post in the picture, so you don't actually know where he's trying to kick the ball. And as I say, it's a lot like a budget. Going into business without a budget, because where you end up is where you end up without some sort of targets to aim at. So this is a good little segue into the benefits of preparing a budget. First thing is it provides a goal to aim at. Life's so much easier when you're actually trying to aim at a particular goal, just as in Bowden's case. If the posts weren't there, he'd just be kicking the ball. So I'd argue that if you haven't got a budget, you just ran the business. You don't actually know where you're going to go. It allows you to monitor performance. So at the end of the day, if you end up with a profit of 100,000 at the end of the year, you'd ask the question, was that a good year or not? And the reality is, unless you actually know what target you're aiming for, you don't know. So if you made 100,000 profit and your budget was a 200,000 profit, it wasn't that good a year at all. If your target was actually break even, it was a very good year. But the key is, with a budget, you can actually monitor performance and you can target the areas to improve. For example, that you might find that perhaps last year your revenue wasn't high enough. You can actually create a budget and target that particular area and then monitor that throughout the year. It also allows you to take corrective action. So if you maybe partway through the year and you find that your revenue's on target, but for some reason your wage bill is too high, or your maybe your rent's too high, or marketing's too high, it allows you to actually look at that throughout the year and go, right, well, actually, that particular spend's not working. Why is it my wage cost so high? My revenue hasn't increased. It allows you to look into that and then take corrective action. I guess from the accounting field many years ago, you'd turn up to your accountant at the end of the financial year, probably 6 months after balance date, and go, right, I hope it had a good year. You sort of cross your fingers and hope that your account says you had a good year. In this day and age with Xero, you don't need to do that. You've actually got real-time financial information, and that allows you to actually make corrective action throughout the year. If you find that your wages were too high, maybe your staff are working overtime, but that's not actually showing in your top line in terms of your revenue. If your rent's too high, why is that? They've obviously put the rent price up. Can you negotiate something there, especially in light of COVID-19? If your marketing spend's too high, maybe you've tried this new initiative and it hasn't worked. So you can actually look at it and go, well, okay, maybe I can cut back on that. The key is you're never going to get to the end of the year, cross your fingers and hope that the result's going to be good. The key is you can actually get in there and say, well, okay, this isn't going so well, so I'm going to correct that during the year. It also allows resources to be allocated, which I think is really important in light of COVID-19, especially around your staffing. I think it's fair to say a lot of businesses are going to need to reduce their staff, which I know it's not nice. But if you budget ahead and see what your revenue is going to be, you can actually work backwards from there to see how many staff you'll need to achieve that target. So again, having a budget in place allows you to pre-plan that. The key overall is, I guess, that proactivity. Without a budget, you're being very reactive. With a budget, you can be very proactive. So I'm just going to jump then onto my next poll around budgeting. So I've just launched that now. If I give you maybe say 25 seconds to answer that around, do you prepare a budget each year? Oh. Okay. I'll end the poll there and I'll just share the results. So as you can see there, you've got one person prepares a budget already, which is fantastic. And then we've got other people saying they don't prepare a budget, but they would like to. The good news is we can help with that. And also I think it's good that you want to prepare a budget. So well done. I just had a comment come through to say that all they can see on the screen is still Bowden Barrett. Oh no, it says it's sorted, so that's fantastic. Not quite sure what happened there. Okay, next thing is around the key aspects of a budget. And again, this kind of comes back to that point around that I don't want to do a budget because I don't know how to start. I think these key aspects are a real good starting point. And I think really importantly, there's no point just doing a budget for the sake of doing a budget. So the key aspects of a budget, in my opinion, are to use logical assumptions and list them. There is absolutely no point of just putting numbers onto a page. It's actually point number 3. Say, well, my revenue is going to be this and it's going to be that, and it's just purely numbers on a page. You haven't worked backwards as to can you actually, if you do this level of revenue, what number of staff do you need? What level of overheads do you need? It's really important to list the assumption. It's really what that does, though, of course, is if you have a budget number and you look to compare it to actual performance, if you don't actually know how that budget number was made up, you're not really able to monitor your performance as well as you'd like. If you've actually listed, well, the revenue is based on hiring one more staff member or bringing one new client on board, if throughout the year your revenue hasn't quite hit target, you can say, well, actually, it's because I couldn't find that staff member or because I couldn't bring that client on board. So again, really important to list your assumptions. The bank also will always want you to list assumptions, especially around revenue, because they want to know how you've made that number up. Look, if you don't know where to start, last year's result is a good starting point. I'm not saying just do last year's result plus 10%, but at least last year's result is a full 12 months. And so essentially from there, you can actually say, well, that's what happened last year. What can we tweak this year? As I mentioned, I think as you go through the budget process year on year, you actually start to really fine tune your budget and really get your business model working more succinctly and a lot more clearly in your head. So what I've always found is that whenever you do your first year's budget, I mean, it's the best educated guess you can do. But the more years you go through, actually, the more it really gets fine-tuned into how your business works. And it's amazing how accurate a budget can be sort of around those years 2 or 3. I mentioned before, don't make the budget just numbers on a page. I've seen plenty of times, perhaps not with rival accounting, but with other businesses where either managers or owners essentially just chuck numbers onto a page. It's usually let's just add 10% to last year's figure, not actually working back, not increasing expenses as revenue goes up. Really, it's just numbers on a page that has no real value if you haven't actually linked expenses into the numbers, into the revenue numbers, or you haven't actually gone backwards and worked out, can you actually achieve that? Some people say, I want to increase revenue by 50%. If you're already in a saturated market, or you've got limited cost to be able to expand your infrastructure, you're probably not going to be able to increase revenue 50%. Also, in this current climate, I mean, whilst it'd be nice to increase revenue 50%, I'd suggest that that's going to be very difficult unless you're a supermarket to be able to increase revenue by 50%. So I think it's about being really realistic with the numbers. Also ensure your budget is by month, not just by year. And so the reason for that is, I mean, a yearly number, whilst it's better than not budgeting at all, the reality, if you do budget month on month, you can actually see where your sort of seasonal fluctuations are. You'll be able to see perhaps where cash flow is going to run out, so you might need some help from a bank to get you through those times. And it's just allows you to actually then also focus your resources. So you might find, say, in hospitality, you've got to hire a whole bunch of seasonal workers in that sort of summer period, but you let them go in the winter period. If you've just got a budget by year, you're not going to see that breakdown. So I'd suggest you really need to budget by month. Also, preparing a few different scenarios is a really good idea. I think particularly important in COVID-19 times, because there's still a lot of uncertainty around when the different lockdown levels or the alert levels are going to be lifted. And then once they're lifted, there's still uncertainty around, will customers actually come back as they once did? I know if you're sort of maybe in the tourism business, that's going to be very difficult to assume that. Hospitality, again, there's a bit of a risk there that, you know, what if my customers don't come back? They're worried about social gatherings, all that kind of thing. So the key to, if you prepare a few different scenarios, you're actually in a great position for when one of those scenarios actually comes true. Like, you might have a scenario that everything goes back to normal within 2 months. If that's the case, fantastic, and you've got your budget ready to go for that. Or the worst case, and hopefully it doesn't happen, touch wood, is that actually it takes a long time for your customers to come back. In that budget scenario, you've probably already made some predetermined staff cuts, some expense cuts. And the key thing there is, if that scenario does play it, you've actually done your homework while you're not in that stressful situation. So you can actually think a lot clearer about your way ahead. That's the key to doing particular different scenarios. I think especially important in COVID-19 times. I'd normally say between 2 or 3 scenarios. You don't want to get too many scenarios. It starts becoming, if you get 99 different scenarios, you don't really know which one to pick. I'd say, high, medium, and low, usually based on revenue is the way to go. Again, the higher the revenue, probably the higher the expenses, and the lower the revenue, the lower the expenses. I would say probably should put this point at the top, and that's the cash flow forecast. Always include a cash flow forecast. We've all heard of that saying that cash is king. I think in COVID-19 times it absolutely is. It's quite a logical progression to turn your profit and loss budget into a cash flow forecast. Really just by saying, well, look, I've got this revenue plan here. Do I get paid in the month that the revenue comes in, or do I get paid the month after? Same for your expenses. You're paying wages in the month that you pay them, or they're declared, whereas maybe some of your suppliers you're paying on 20th of the month following. It's not that much more work to turn your P&L budget into a cash flow budget. And the important thing there is you can actually work out if there's going to be certain months where cash flow dips into the negative. If you haven't got funds you can introduce yourself, or you haven't got an overdraft, then you will bounce payments, which of course means you're probably not going to stay in business for that much longer. What banks love is if you go to them and say, hey, I'm actually okay for cash flow right now, but perhaps in 3 months' time I'm going to dip into overdraft. Can I please set up an overdraft and I want this much and I'll be able to pay it back by then. Banks are far more likely to grant you that if you've done the forecasting, and that's why cash flow is really going to be important. The balance sheet forecast, in my opinion, it's optional. The software that we use does prepare a balance sheet forecast. The only thing I'd say, if you're doing it on a spreadsheet, probably don't bother with a balance sheet forecast. The only thing would be to make sure you factor in any asset purchases, because of course they are going to impact cash flow. And if you do need to buy an XYZ machine to be able to go into this line of business or to be able to support these customers here, make sure you factor that in, because that's going to have a big cash flow impact on your business. but normally a balance sheet forecast is a nice to have. Before you go ahead and do your budget, I think it's really important to work on a budget theme, because that's going to indicate just how your budget's going to take shape. I'd suggest for a lot of businesses in this current climate, the top example there of getting through the year is going to be your budget theme. I mean, normally it's things like improvement on last year, so I want to grow 10% of profit, or I want to make a profit of 200,000, or it could even be I want to spend more time with my family. And that's absolutely a good target to aim for as well, because I think a lot of us do sort of work too many hours, and sometimes it's quite good to be able to cut back to just working the normal hours. But back to that first example there, getting through the year, I think you could be realistic in setting your budget theme for this year. And I think in a lot of cases, due to the uncertainty, a good goal, the first goal would be to get through the year. And that might be your only goal, to make sure you're there in 12 months' time. In this current climate, there's undoubtedly businesses that are going to go under. So you might even find that just by getting through the year, you're actually in a better situation because a lot of your competitors have fallen over. I think if you start going sort of too big and bold strategies to increase revenue by a whole bunch in a certain industry that's been heavily impacted by COVID-19, I think that's unrealistic. So the key is make sure you've agreed as business owners what your theme is. Okay, so on to the details around specific revenue, costs, and overheads. So revenue, in order to budget revenue numbers, last year's numbers are a good starting point. Again, that's not the be-all and end-all, but at least you know what you did last year. The numbers will also be seasonalised. So if you've got quite a seasonal business, then you'll actually see the peaks and troughs throughout the year. So that's a really good start. And it's really important that you do continue that seasonalisation of your numbers. So, and again, by using last year's numbers is a good starting point, but it's really important to note that if maybe you're a tourism business and in the summer, that's when you make all your income, and in the winter you don't. Of course, if you're skiing, I suppose you'll be there around. But really important to appreciate, just when the revenue is going to be high and when it's going to be low, because that's going to impact your staffing levels and perhaps some of your overhead costs as well, which again, that flows into the cash flow forecast. I see plenty of situations where people start with a budget and just go, right, it's 20,000 revenue across each month. Just pretty much unrealistic. There's not many businesses that are going to have a straight line revenue same each month. And so I would stress that you actually look to seasonalise the numbers where you can, and using last year or the year before is a really good guide to see when you have your peaks and troughs. It's important to note that the revenue numbers are what the bank will look at the most. So they'll see your expenses, your direct costs, they'll see your overheads, but in actual fact, it's the revenue numbers that they're going to stress test. In most cases, the bank will actually look to decrease the revenue numbers you're given to see what impact that would have on paying back loans. But rest assured, it's the revenue numbers that are going to get the most scrutiny. And if you've just straight line your numbers across the year, most banks are going to look at it and go, I'm not convinced you've given this budget too much thought. Also on top of with the banks, really important to list your assumptions behind the revenue numbers. If you don't, the bank will probably ask for them because they want to see actually what you're doing to keep your revenue the same. What I'd say is in this current climate, you want to have a plan for how do you get existing customers to come back and how do you bring new customers in. They are two separate plans, but I think it's really important you've done your homework around that. I think just relying on customers to come back on their own volition is probably wishful thinking. Let's hope you're right, but I would suggest you probably need a plan just to get those customers to come back. And as for new business, you might find that a lot of businesses are a little bit shy about taking on new expenditure or changing providers. So I think you'll need a special plan to kind of bring new customers on board. It might need a bit more work than perhaps it has been in the past to bring a new customer on board. In terms of the numbers, I think it's really important to make sure the numbers are a stretch. There's no point in making your budget too easy because you'll just go on cruise control. But you've also got to make sure that the numbers are achievable. There's no point going, well, I'm going to increase revenue by 200% in the current climate. If it's just not achievable, you'll actually give up on that target pretty early. And therefore, again, that's not really actually going to help if you've given up already. A straight 10% increase on last year is pretty much a go-to for a lot of people when they're doing a budget. I'd suggest that's quite dangerous. You need to make sure that's actually going to be achievable. Just because I think it's easy to say 10% increase, but if you can't actually work out how you achieve that, again, that's not going to be an achievable target, and you're probably going to give up on it. So direct costs, just wanted to specify that when we're budgeting, we've got a difference between direct costs and overhead costs. So example of direct costs would be purchases of stock, subcontractors and wages. The definition is that in theory, a direct cost should be able to be directly linked to revenue. So if you've got a subcontractor working on a particular project or delivering services to a particular customer, in theory, you can tie that cost of that subcontractor to that particular revenue project. And by definition, most direct costs should actually increase or decrease in line with revenue. And so the more revenue you've got, if it's, say, wages, you probably need to hire more staff. Same for purchases. If you're going to sell more goods, you're going to need to have more purchases. Conversely, if revenue goes down, you're probably going to need less wages and you'll also need less purchases. Building that relationship into the budget, which I normally say having a direct link, say the KPI should be a certain percentage of revenue. So maybe wages should be, say, 35% of revenue, or purchases should be 30% of revenue. Depends on the business, just with those KPIs, and I can help you out with getting the right KPI for you. But the key there, if you link that into your budget and say, well, wages are 30% of my revenue, as you increase or decrease your revenue, your direct costs will increase and decrease as well. Really good for your scenario planning. So the more you can link your direct cost to revenue, the better. Also, it's a great way to have a KPI. For example, if you think that your wages should be 35% of revenue and you find it's creeping up to 40 or 45%, that usually means either your staff aren't being as productive or maybe you've set the wrong target. But really important to hone in on that. Often you'll find it's that staff kind of realise they're on a bit of cruise control, and the best way to find out whether they are or not is to see, well, actually, I'm still paying you the same, but the revenue's going down. What that's going to show is actually that your wages KPI as a percentage of revenue is going to increase, which means that the wages cost is going up higher for every dollar of revenue. And that's a good opportunity then to look into that and say, well, look, that's not working out well for the business. Because at the end of the day, your revenue minus direct cost equals your gross profit. And for those of you I've met with and discussed your numbers with, you'll know that my firm view is that your gross profit is a direct correlation to how well your business is going. It's the engine room of your business. The overheads are important costs to keep the business going, but actually the true measure is how well your gross profit's going. If your gross profit is going down and it continues to go down, in my opinion, you're going to struggle to have a business that stays alive for a long period of time. Overhead costs, so typical examples would be rent. That's probably going to be your biggest overhead cost, admin wages and insurance. So by definition, admin costs or overhead costs have no direct link to revenue. So for example, rent's going to be the same whether your revenue increases or decreases. You're still going to pay the same amount of rent, unless of course you can negotiate a cheaper rent in COVID-19. But ignoring COVID-19, your rent costs will stay the same. The only often with overhead costs, they increase in chunks. For argument's sake, maybe you've got a rent of an office building that's got 10 staff in it. As your revenue increases, you have to hire more staff, and then you need to actually get a new office building. That's when your rent would increase in sort of one lump sum as you move to a new office building. But by definition, overhead costs are going to stay pretty static whether your revenue goes up or down. And that's why it's important to actually work out what your core level of overheads should be for your revenue levels. Be aware of which costs are mission critical and which are nice to have. So I do see a common mistake that people see profit dropping and think, right, I'm just going to cut overheads to increase profit. In my opinion, that's a very short-term view, because in most cases, the overheads are actually needed to be able to generate revenue. I think in this current climate, if you can defer overheads or trim them where possible, can be really important, because every dollar you can save is going to be really important to getting through. And that's why I think it's really important you've worked through and actually seen where there's any sort of fat in some of those overhead numbers. But often overheads you'll find are pretty static year to year, which to me shows that's actually your core level of overheads, and you probably can't do too much to reduce them. Over time with inflation, they'll often increase. So you will see a sort of a gradual increase. Obviously try to avoid that if possible, but I guess a lot of businesses have their costs going up, so therefore they're increasing their prices. But really important that you don't just jump your first port of call just to jump and slash your overheads, because often you'll find it will start to impact your business if you cut out too many overheads. Well, that's a lot of talking from me, a lot of information shared. Now's the chance to ask me anything. So if you can either raise your hand and it's going to note up that I'll turn your microphone on, or if you type a question in the Q&A box, or on the chat box. I'll be able to answer any question you've got. I'd say it would be about budgeting, but pretty much any question you've got at all, I'm happy to answer them now. So I'll just leave that open for probably about a minute or two, and then I'll wait for the questions to come in. So the first question I've got is, what is the best way to budget if your income is irregular? Yeah, that's a good question. I think the key here is actually listen to the assumptions. If it is irregular, just do the best you can. Again, it's that best educated guess and making sure you list your assumptions as to why you've put that revenue figure in that particular month. If it's the case of being irregular purely because you don't know whether the income's going to come in May or June or July, again, if you list that assumption, hey, we've got a big sale coming in, I'm not sure if it's going to be May, June or July. If it's just your line of business, you're not quite sure how this product's going to take off, just list your assumptions. There's not really any other advice I can give apart from that, except to say that the more you do the budgeting, you'll probably get to know your business better and have a much better chance in future years to get that budget as accurate as possible. Bearing in mind, the budget is just your best guess, so you're not going to get it right all the time. Next question I've got is, can we move overhead costs to direct costs in Xero? So yes, you can. Essentially, that's under your chart of accounts. I can show you that offline if you like. But essentially, you go to your chart of accounts and change a cost from direct costs to overheads, or vice versa. So that's nice and easy to do. Next question I've got is, could you please comment on tax and GST, etc., in a budget? Yeah, really good question there. So bit of a spoiler there, I guess. The budgeting software that I'll take you through briefly at the end of the webinar deals with that exactly. So acknowledging that your GST is usually due every 2 months, or it could be 6 months, and also there's income tax to pay. Whether you're on AIM or whether you're just standard provisional tax, all that's factored in as well. But really important that question is raised, because I think a lot of people do forget about those GST and tax payments. Obviously, the ID don't forget about them, so you've got to pay them. But it's really important they're factored in, because they often have a big impact on cash flow. So that's a really good question. Right, well, I'll just wait for any more questions to come through. Maybe leave another minute. Okay, next question is, should we be accruing, or does that go into the too hard basket? So in terms of accruing expenses, accruing's more in the I guess actual Xero, or your actual performance, whether you accrue that expense or not. And in terms of a budget, if you think that you're going to incur an expenditure in March or in April, that's actually when you put it into the budget. So I think in terms of accruing costs, the most important thing is around at year end to make sure that the cost goes into the correct year. If you're worrying about whether the cost goes into, say, October versus November, it's probably not too big a deal, I'd suggest, for most businesses. But if you worry about whether it goes into March or April and you've got a March balance date, I think it's really important to accrue the cost then. But ultimately, I guess when it comes to budgeting, you are looking ahead into the future, so accruing is probably not as important. But you're on the edge performance, I'd say, yeah. Year end, yes. Month to month, probably not so important. Okay, I'll just leave get open for some more questions. Right, next question is, what about inflation? Yeah, that's a really good question. And I think it's probably difficult in this current climate as to whether there will be inflation. There's obviously different economists think different things. If you're looking ahead 1 year, probably inflation's not going to be too big of an impact. Again, though, as long as you are actually increasing your prices in line with inflation. Therefore, if your revenue is increasing with that inflation, but you haven't budgeted it in, and your costs are as well, it's probably going to be sort of somewhat neutral. I mean, you can kind of get to the point where you might increase everything by 1 or 2%. I'd say it's probably not hugely important in terms of your preparing a forecast or a budget, but I think quite important in terms of your service offering is to increasing your costs in line with inflation. I think probably that rule may go out the window in this current climate, because I would suggest some of your customers may not be too thrilled with an inflation adjustment. I think you just need to really understand your market. But in saying that, if your costs have been increased with inflation because your suppliers are passing it on, you may not have a choice. But I think in this current climate, just be mindful with increasing your costs for this year only with inflation. Okay, I'll just give it maybe another 30 seconds for any more questions. Keep the questions coming, by the way. These are really, really good questions. Okay, well, in that case, there's no more questions at this stage. Hey, look, as I'm going through the rest of the webinar, please just put the questions into the Q&A section. I'll see them coming through and I'll be able to answer them as we go. So I think the more questions you ask, actually, the more everyone else is going to learn from this as well. So thank you for the questions so far. So COVID-19 considerations, should I say considerations? Whoops. I mean, budgeting is really important, or budgeting/forecast is really important, I think, in any year you do. But I think particularly, as I said before, in this year was COVID-19. So I've put cash flow at my very first point. I think cash flow this year is going to be the most important thing in budgeting, purely because you want to make sure you have enough cash flow to pay your expenses and to actually have the infrastructure to be able to offer your services. Cash flow could be impacted pretty big with perhaps revenue dropping, so really important you factor that in, and you've gone to the bank to make sure you've got adequate support from them if you need it. But the key is, if you've done the different scenarios that I talked about at the start, you should actually be able to work out how much cash you need under each scenario. So the real key there is to make sure you've got enough cash to provide for each scenario. In a lot of cases, it's going to be talking to your bank. Perhaps in the low scenario, you need to actually get a loan from the bank or an overdraft. You could, of course, introduce your own funds. It's going to be a cheaper way of doing it, but also as long as you're not sort of, you're going to use those funds for something else that you need them for. But having your own funds would be, I guess, a real bonus. But the key is there's no point if progressing further if you're not going to have sufficient cash flow to get through the year. The banks have been fairly good to deal with from what I've seen. They are going to need quite a bit of information from you. I'll talk about that soon. But if you can provide them with enough assurances, most banks will be pretty good when it comes to providing you with sufficient cash flow. And there are a few different options, which I'll get to in the next couple of slides. Revenue, model different scenarios based on alert levels. I think probably that's going to be the biggest variable in budgeting, is to how quickly we come out of the different alert levels. And obviously different industries are impacted in a different way. But I would suggest be very clear on what each alert level means for your business, and then having a scenario based on maybe, obviously we're dropping into alert level 3 on Monday. What if alert level 3 lasted 2 weeks? What if it lasted 4 weeks? What if alert level 2 lasted 4 weeks? What if it lasted 6 weeks? Really important to actually work out revenue-wise what different alert levels mean for you. Coupled with that, of course, though, is actually trying to work out a plan for how to operate in each of the different alert levels. If you're going to do takeaways, say your hospitality in level 3, have a plan. Do you actually want to do takeaways in level 3, or do you want to keep the business closed? If you're going to do takeaways and you normally wouldn't do takeaways, you probably need to advertise to your clients that you're doing takeaways. Same for builders. Some people might think, oh, look, the builder can't come to my house in level 3. My understanding is that you can, but I think the key is you understand what each level means for your business, and you budget your revenue accordingly. Direct costs. As we talked before, direct costs should be linked directly to the revenue. So it's going to be really tailored. The direct costs should be tailored based on the different revenue scenarios. And I think importantly, what does it mean for your staff levels? Yes, your staff wages are usually the biggest cost. Wages and subcontractors are usually the biggest cost when it comes to direct costs. And if your revenue is going to be down, there's a good chance you probably can't actually sustain all your staff on the payroll. And I know that it's tough because your staff are going to have their own issues as well. paying rent, paying mortgage, putting food on the table for their kids, they're going to have some issues. But at the end of the day, you can't actually afford to keep staff on if the work's not there for them. And purely because if you make that decision now and let staff go, it won't be nice, won't be fun, but it will give you a much better chance of being around in 12 months' time. I'd use an example that if you had, say, 10 staff and you try and keep them all on, you might find out that everyone loses their job because the business goes under. If you actually get rid of 2 staff and the business is still around in 12 months' time, you've actually helped out 8 of your staff members. There will be some tough decisions. All I'd say is make sure if you are going to let staff go, you've got some professional help to make sure that you're doing it legally. But I would suggest having a plan under each of your scenarios you've planned around, and basically knowing within yourself and people with your other business owners which staff you would let go and which decision. Again, it comes back to the point, if you get into that position, it's probably going to be a stressful time. You've actually done the homework around which staff you'd let go. Then it's sort of, you've got a plan in place already. Try where possible to be as openly communicating with staff. I know that it's difficult because you don't know which scenario potentially you'll end up in. So you don't want to sort of say to staff, hey, there's a good chance you're going to lose your job. Because if they end up your scenario ends up being a really good one, and that staff member doesn't have to be let go, if you've told them there's a good chance to lose their job, they probably would have looking for another job already. But I think the key is, just understand from a direct cost point of view what the different revenue scenarios mean for your costs and what the implications of reduced costs mean. Overheads, I'm suggesting you identify which costs can be deferred and won't materially impact this year. And by that I mean, let's say you had a training budget for $10,000 to upskill your staff. If that was kind of a nice to have, perhaps you'd put that to one side. Maybe if you've got magazine subscriptions or you're looking to fly to different meetings rather than doing video conference, have a think around, right, how do I actually look to trim back some costs? What you don't want to do is end up making big slashes in costs on your overheads that actually impact your business. For example, if you say, well, in that case, maybe I've got some admin stuff in the office, and maybe I'll just let them all go because they're not directly generating revenue. If you get rid of those staff, who's actually going to keep the office in check to be able to, your frontline staff to be able to deliver the revenue? So really important, you're not going to make cuts that are going to impact the business in the longer term. But you might even find that some of those costs can be deferred. As I say, with the flights, for example, argument's sake, you might say, well, no flying for 6 months, but in 6 months' time, we'll revisit it. Or no training for 6 months for staff, but in 6 months' time, we'll revisit that situation as well. I've listed rent in there purely because rent is most often going to be your biggest overhead cost. And so I think there's obviously plenty of news around commercial rents being reduced if you've got that clause 27.5 of your Auckland District Law Society lease agreement. Not all of our clients have got that particular clause, but I would suggest really early on, if you haven't already, talking to your landlord about getting some kind of rent discount for the short term, not just for the 4 weeks of lockdown, but potentially going forward as well. Because rent's so expensive, if your revenue's down, you may not actually be able to sustain that higher rent cost. And your landlord obviously won't want to give you a discount because they've got a mortgage to pay too. But I fundamentally think it's about trying to meet somewhere in the middle, because at the end of the day, your landlord probably wants you to stay in the building in the longer term to keep paying the rent. If they make you pay for it now and you have to close, in a lot of respects, they're probably going to struggle to re-tenant that building. So I think be really upfront with them, your landlord up front, and actually agree on a plan for the next 3 months. I'd suggest just have some certainty around that. Also think it's really good in the current climate to come up with a list and dollar value of your potential cost savings and rank them in the order they can be implemented as needed. And ultimately, if they can be cut now, probably cut the cost now if you can. Again, it could just be that it's a temporary cut, or it could be a permanent cut. But I think every dollar at the moment is going to be really important. If there's kind of things you're paying for that you don't really need, and I don't think most of my clients are in that situation. We do review overhead costs when we catch up. There's not many clients carrying a lot of, unnecessary expenses, but I think probably most people could look through their list of overheads and perhaps look to trim a couple. And I think the more you can trim, the better. But even if it's the case, you don't want to trim that yet. Just have a list. So if you get in a situation where revenue drops and profit drops, you've got a list of expenses you can look to reduce. Asset purchases. So as I've mentioned earlier, these will have an impact on cash flow. So don't forget to include them. Maybe you're looking to buy a new piece of machinery, and that's factored into your revenue targets, in which case revenue targets can't be achieved without that machinery. Make sure you factor it in because it needs to go into your cash flow budget. Where possible, though, I'd suggest asset purchase is usually quite a big cash outflow. I'd defer the asset purchase to next year as long as it's possible. So maybe it's the case you've got a car you're going to look to trade in this year, perhaps keep that car for another year. If it's an XYZ machine, if you're not going to launch that particular product using the XYZ machine, maybe defer it. But if you've actually based your business model, your revenue forecast on that machine being in place this year, you will, of course, need to go ahead and buy it. But have a think about whether you can defer some of the asset expenditure. Oh, it's in there twice. Ultimately, I think the key is with hard work and good planning, you will get through this. There's a lot of negativity out there in the market, and it's completely understandable. It's a very uncertain time. But I think the key is if you can actually talk to your bank, get funding from them where possible, have a real plan in place, you've got a really good chance of getting through this. And the advantage, as I said before, is if you actually do the plan and do the hard work, there'll be a lot of businesses who go, oh, this is too hard, I'm going to close up, or basically haven't done the planning and can't keep their business alive. All that's going to do is reduce your competitors. So I think, if you get through this year, you might well find you're actually in a pretty good position next year because a lot of your competitors have fallen over. But do the planning now. Don't sort of wait for things to, get tight. Do the planning now. So how can the bank help? I mean, often, as I've said before, there's a bit of a love-hate relationship with your bank. I think in this current environment, it's really important you move that relationship back towards the love area rather than the hate, because you're probably going to need them to some degree. Whether it's interest-only loans, you might find that you've got a loan already and you just go to interest-only, it's going to save a bit of cash flow on the principal. The business finance guarantee scheme, which I'll go into in the next slide, could just be a new loan. So the business finance guarantee scheme is a specific set of terms for a 3-year term. A new loan might be that actually you can just get a new loan for maybe a 5 or 10 year period. So you're not having to be constrained by the business finance guarantee scheme. Or it could just be you need an overdraft. You might find with your cash flow planning, hey, look, actually, I'm going to probably dip into overdraft maybe in June. And I think we'll be able to trade out of that maybe sort of August, September. So I don't want to get a new loan I'm sort of tied to for 2 years. I just want an overdraft. And then the key with the overdraft is, of course, you only have to you only pay interest on the amount you draw into it. Whereas with a loan, you're paying interest on the whole amount. Of course, overdraft interest rates are usually a lot higher than the loan. So if you do think that your lending is going to be a more permanent thing or a longer term thing, I'd recommend going for a loan over an overdraft. Just want to touch on the mental health side of things. And I brought this up in my previous webinars, and I think it's really important is that during this time, mental health is going to be, a real challenge for a lot of people. So firstly, again, you're not alone. A lot of other people will be going through this situation as well. It is stressful because there's a lot of uncertainty around when will business go back to normal, when will the lockdown levels get lifted, what if my clients don't come back and buy from me? I've got 5 staff, I don't want to lose them. A lot of stress. The key is make sure you've got your support network you can reach out when you need. That could be friends, family, obviously, your accountant, or might be you've got some other advisors or mentors, perhaps even other business owners. They're going through the same situation. My recommendation is you get regular exercise. That doesn't work for everyone. I know it works for me. If I don't exercise, I can get a bit cranky. And have a daily routine. I think that's more, I guess, in lockdown, making sure you're not sitting there just twiddling your thumbs. Build that sort of business plan and forecast and into your daily routine. So you're actually, really looking at that as you go. So you're in a position for when lockdown is lifted to really launch the business as quickly as you can. So Xero do have a XAP program, which is Xero Assistance Program. If you are struggling, that's essentially 3 free counselling sessions, all confidential. And if you've got a Xero subscription on the standard version, then you get them, as I say, 3 sessions for free. That includes your staff as well. So it might be you find one of your staff members is struggling, you can actually put them in touch with through the Xero Assistance Program, and that staff member can get the free counselling as well. Should also mention includes your family. So maybe your partner's struggling or one of your kids is struggling. Doesn't matter. It's absolutely, you can all use XAP. And I should say it does matter that they're struggling, but it doesn't matter whether it's friends or family. Sorry, with your family that can access the XAP program. Anyone in your family or in your workforce can. But I just wanted to touch on mental health because I think it's really important, and I don't think it's getting any better. I don't think it'll get better until business sort of gets back to semi-normal. So the Business Finance Guarantee Scheme is for businesses with a turnover of 500k to 80 million. You can borrow up to 250k for a maximum of 3 years. So just bear in mind that loan has to be paid back within 3 years. So if you do get a sizable loan, you just factor in the loan payments. So I'd suggest only sort of getting what you need. The government will guarantee 80% of the loan and the bank 20%. What that means is if someone falls over and can't afford to pay the loan, whatever amount is left outstanding, the government will pay 80% to the bank, and the bank will absorb 20%. In order to access the scheme, you have to have already drawn down existing lending facilities. So you might have, say, a $50,000 overdraft up your sleeve. You will have to either cancel that or draw it down in order to get the Business Finance Guarantee Scheme. It is for NZ-based businesses only. And important to note that normal credit and lending criteria do apply. So essentially, if you weren't able to get a loan before COVID-19, you're probably going to struggle to get a loan during COVID-19. They're not give loans out to anyone that asks. There will be the normal lending criteria. So I think in the first instance, just talk to your bank, really. Speaking of what the bank's going to need, now I've had a few clients already go for the Business Finance Guarantee Scheme. What the bank are asking for is a 2019 year financial statement, the 2020 year draft financial statement, and a 2021 and sometimes a 2022 year P&L and cash flow forecast. In the past, we've only ever had to provide 1 year's forecast to banks, but I think a lot of banks are worried that this year will be a get-through year, and they want to basically see how you're going to turn around in 2022. So again, you're going to need to do 2 years worth of forecasts in some cases. And of course, the longer you forecast out, the more guesswork's involved. But if that's what the bank want, you pretty much got no choice but to abide with that. So the Arrival Accounting budget offering, this isn't intended to be a hard sell. It's purely, we were actually going to launch our budget offering in April before COVID-19 struck. Unfortunately, because COVID-19 struck, we got a bit behind in terms of launching it. But I generally believe actually having a budget, as I said at the very start of the webinar, is very important for those reasons I listed. We have been working with different budgeting software to try and find the best one. We've come up with Spotlight Forecasting is, in our opinion, the best budgeting software there is. What it will do is allow us to do a P&L forecast, a balance sheet forecast, and a cash flow forecast, pretty much all integrated. So it's going to factor in your cash flow from asset purchases and tax payments and GST. It's going to factor in when you normally get revenue, is it this month or next month? If you have to draw down loans, it's going to do a loan repayment schedule. So it's very detailed. And in my opinion, it's going to be very good for business owners because it's also going to list all your assumptions that you've created in coming up with the forecast. The first year is always going to take the longest to set up all those rules. What we'd look to do is sit down with you for 2 2-hour sessions. I don't think it's worth doing 1 4-hour session because I think budgeting can be fairly taxing on the brain. So what I find works best is if you do a 2-hour session with us, we go through your business model, we start to get the budget going. Our team will work on it in between times, and then the next meeting would look to kind of catch up on where we left off from last time and finalise the budget. The first year does take longer, purely because of setting up the parameters of the budget. Once we've set up those parameters, then the next year it's actually going to be a lot easier just to essentially roll the budget forward, recheck the parameters, but usually it does take less time. For that reason, our first year price is $1,200 plus GST. We do see a lot of other accountants offering that for about sort of $2,000 to $2,500. I don't think that's actually necessary. In all these cases with our clients, we know your business well enough already, so we're not having to sit down and kind of learn your business model from scratch. But I do think it's still worth talking through your business model. For that reason, we can offer it for $1,200 or $100 plus GST per month. Just goes onto your monthly fee. In future years, as you can see, it's $75 a month or $900 one-off. And that's, again, because we've actually got all the parameters in place. It's just a case of rechecking them and forecasting ahead for the year. So that's our budget offering. And saying that, as I said before, with the government funding, we've signed up with a regional business partner network. And so as long as you use the service between the 29th of April, we do your budget between 29th of April and 30th of June, it's actually 100% funded by the government. So as I mentioned last week, whilst there wasn't any cash given to small business owners, one of the things that the government announced was that you get free advice essentially to help get through this. And cash flow and forecasting, understandably, is pretty important during this current climate. And so if you sign on to the Regional Business Partner Network, I've put the address there, and I'll send out a link to this to all clients soon anyway. You essentially have to register on the Regional Business Partner Network. And then our offering is down there. There's a specific link to it. All you do is click onto it and subscribe for that. It should, in theory, get approved. This is between 29th of April and 30th of June. We'll get a note to say that you've applied for it. And essentially then we can catch up and do those, that budgeting session, and essentially the government's going to pay for that whole amount. It does mean, of course, that if we can do that this year, then going forward next year is going to be paying that second year and future year fee. So you kind of get the first year paid for. Look, this isn't a hard sell. I genuinely believe that having a budget for business is really important. And I think this is actually a great way to start off getting your budgeting, thinking about that for free. And I will definitely guarantee as we go through a meet throughout the year, if we're comparing actual numbers to a budget, the meeting is a lot more meaningful because you can actually look to target specific areas of your business, those that are working, those that aren't working. So again, I will send this information out around how to access. Well, first you have to register, as I say, on the Regional Business Partners Network, and then you can click on our link and register for the cash flow and forecasting service. I have had a question come through, so I will just jump onto that. All right, when can we start? It's almost like I planted that question there. So essentially from the 29th of April is when the government will fully fund the budgeting. So my recommendation, if you are keen to do a budget with us, is to jump onto the Regional Business Partner Network, register, and then essentially I think you have to pretty much wait until the 29th of April, but maybe click on the link, the Arrival Accounting link, and see if you can actually pre-book. To be honest, they haven't given us too much information around the actual booking process. I think there's been a bit of a scramble from the Regional Business Partner Network to get this functionality set up. So there's certainly a bit of confusion. I have gone back and asked exactly how the process works, and I'm yet to hear back. Apparently there's a bit of a delay in answering calls because, again, they are so busy. But again, we'll send out this offer to all clients. One thing I have done is we've actually hired a senior accountant to start with us on the 7th of May. And what they're going to be doing is focusing on all the tax compliance. So getting the financial statements out the door, tax returns, which is going to free me up pretty much from the 7th of May onwards to focus on helping clients one-on-one, helping with budgeting, because we've certainly recognised that this year is probably going to be tough for a lot of you, and I want to make sure I'm actually there to be able to assist you one-on-one as needed. Of course, though, there are still financial statements and tax returns to do, and I'm well aware of that, hence why we've hired this new person to start. So we should be in a much better position. We'll be in a position from 7th of May once the new person starts to be able to roll out this budgeting and general business advice, because I think that's actually probably a time where a lot of you clients are going to need that extra one-on-one service, and we want to be able to help you get through this and offer that. Just thought I'd just send a few screenshots through of Spotlight Forecasting to see what it looks like. This is a fictitious example, but essentially it's listing your assumptions, it's listing the revenue rules, and it's listing the payment profiles, as in revenue comes in 100% in the current month, or do you get revenue the month after. These set of assumptions, again, they're important for us to discuss as we work through. They're also really good. The bank loves seeing these assumptions because it actually shows you've thought about just the cash flow timing of your revenue and how revenue's been created. Screenshot here, maybe a bit small on the screen. Essentially, it's just a layout, really showing revenue, cost of sales, gross profit, etc., and then the profit down the bottom. So that's what it's going to look like. So nice and tidy. There'll be a balance sheet one and a cash flow one. I haven't got screenshots for those because that would be quite boring. But what it also has is graphs. So once we get through the budget and the forecasting, we can actually prepare graphs to show different trends. And really look, I guess, down the bottom right, that's a really good graph. I think it's really important because you see there that there's going to show that in June, cash flow is going to be tight. And it might sort of clear out by March. That sort of graph is going to be important to work out just what help you need from your bank. And again, the bank's going to be sort of pleased to see, look, it's going to be tough for the next sort of 6 or 8 months, but in March, you're going to come out of it. And again, if you've listed those assumptions as to why you're going to come out of it, that's going to be important for the bank as well. And the key is you've actually thought about just, how your business is going to progress throughout this period. It will be difficult, but as I say, if you do the planning, do the hard work, then you'll definitely get through it if you do all that that work and get support from the bank. The bank is going to be important in this situation. Right, well, that's the end of the webinar. Still got time for questions. Really keen though, if anyone wants to share their experiences with budgeting or any actual experience to do with what they've done to get through COVID-19. Ideally, if you can raise your hand, I'll turn your microphone on, you can share your story over the mic. Otherwise, if you want to put it in the chat section, be really good to kind of hear what's working for you. As I say, yes, I've got the experience in budgeting, and I've been working with a lot of customers or a lot of clients around COVID-19, but I reckon it's best if sometimes if actually you can actually share stories amongst yourselves because you're all in the same boat. So I will just throw it open. If you can put your hand up or even put a question or comment in the chat section. Maybe I'll leave this for, say, a minute. So I've had a question come through around Spotlight. Does Spotlight integrate budget versus actual with Xero? Sorry, probably should have mentioned that. Yes. So Xero and Spotlight integrate, so it brings in actuals, and that's again a good sort of starting point for each year's forecast is to bring in the actuals from last year, but it does integrate. So probably one of the big things I see with spreadsheets, whilst they can be very useful, they can become a bit unwieldy. And often the person who created the spreadsheet is really the only person that can update it. And so it can get a bit tricky. But with Spotlight forecasting, basically Xero is linked in directly with Spotlight. And so therefore, any actuals are replaced in the forecasted numbers. And we can run graphs around actual versus budget, as well as actually comparing numbers on that basis. The Spotlight forecast numbers then actually feed back into Xero as well. So if we run a Xero management report, it's going to have the budget numbers in there. So they are fully integrated. Right, any other questions? Anyone want to share any experiences that they've had? Don't be shy. I will just finish with a poll then around your bank. And so the bank can sometimes be a bit of the dirty four-letter word, but just want to check with you how many you actually have contacted your bank in the current climate. Let's give another 5 seconds for anyone to respond. Okay, so a bit of a spread there. So we've got some saying yes, some saying no and I won't, and some saying no but I will. For the ones that say no and I won't, if you've got the cash stuff, that's fantastic, and your forecast suggests you won't need them. I would, however, suggest if it looks like you could run into cash flow problems, it's well worth talking to your bank, but we can discuss that offline. One more poll to go. And that's around scenario planning, just around whether you've actually thought about different scenarios for the year ahead. Okay, so it's great that two of you have already, and two of you have decided not have, but they will at some stage. However, no one has said no, they won't, which is fantastic. As I would recommend, scenario planning is going to be really important in the year ahead, just with all the uncertainty. Okay, got another question coming through. Oh, yeah, it's a good point there. Someone said that contacting your bank was a condition of applying for the wage subsidy. Yes, it's absolutely correct. I would suggest probably not everyone has followed those rules to the letter of the law, but that is a very good point. Yeah, so yes, they should have, but I'd still suggest some probably haven't. Okay, I'll maybe leave another half a minute for any questions you've got. Even if it's not budget related, happy to answer any questions that you think I can. Okay, well, that was the questions. All got a comment in the chat, which is great. Let's go to that. So just comment. Someone missed. They were supposed to contact the bank when receiving the wage subsidy. So the criteria there was that you had to take any steps you could to deal with COVID-19. One of which was to contact your bank. I mean, it was listed, but as I said, I don't think the government were actually. I mean, was to put it on there. There's actually no policing to make sure you have contacted your bank. It was just trying to make sure that essentially you weren't going to take down the wage subsidy just for your business to fall over in 12 weeks. So making sure you've got on contacting your bank as soon as possible. But the government won't claw back the money if you didn't contact your bank. Okay, well, that brings the webinar to a close. Look, stay safe, stay well, and we will get through this. Obviously, with lockdown lifting to alert level 3, that's good for a lot of you, not good for everyone, I appreciate. But of course, the sooner we get to level 3, the sooner we can get to level 2, 1, and then 0. If you've got any questions you want to ask one-on-one, please contact me. I hope you found the webinar useful. We have recorded it and we'll be putting it on, send the link through shortly. In the meantime, we'll also send through the link to the budgeting and cash flow offering, which has been done through the Regional Business Partners Network, which again, we will use Spotlight Forecasting for. I think it's actually a great initiative to get a budget prepared. And again, it's on the government, so they're not giving you any cash apart from the wage subsidies. So I'd suggest this is probably the next best thing, and also means you've got a budget template in place for future years. So I'd suggest it's actually quite useful. Just had a comment come through. Okay, just people thanks for everyone for attending. And to say we'll be in touch. Stay safe and make sure you do that budgeting and planning. Whether we do it or not, I still think it's worthwhile that you think about budgeting just for the year ahead due to the uncertain times. And once you get into it, I would encourage you to budget every year. Believe me, once you've done the first year's budget and we've got all the logical steps in place and the assumptions, it'll be a lot easier in future years. Anyway, that's it from me. Stay safe, everyone. And if you've got any questions one-on-one, just fire through an email, give me a call. Thanks, everyone.